What are the top 7 stocks in my $2.3 million portfolio? I'm unveiling these 7 growth stocks today. I'll dive into the bear and the bull case and reveal my cost basis and percentage returns for each stock pick. You'll never guess all 7. Let's go. Number 1, if you've been following the channel for a while, you know that Nvidia is my top holding. I've been long since 2017. Cost basis right now is $3.95. So I'm up about 2,689%. These are all house shares. So I've taken profits. This is the profit remaining, and it's 12.31% of that primary taxable brokerage, that $2.3 million portfolio. There are many reasons to be bullish about Nvidia. Of course, the sentiment is not great right now. Nvidia is a leader in GPUs with over 90% market share. Revenue forecast $11.3 billion for 2025. Now, Nvidia did recently have a $5.5 billion write-down, but that revenue forecast $111.3 billion for 2025. The margins are over 70%. Part of the reason the stock sold off, a little bit of margin compression. As competition heats up and more GPUs are available from companies like AMD, it will bring the margins down over time with Nvidia. Growth drivers include AV, autonomous vehicles, cloud gaming, edge computing, and a great partnership ecosystem. Overall, Nvidia has strong analyst sentiment. You see price targets that have been revised down, but still up to $200. That provides significant upside from current prices. I believe Nvidia has huge potential for autonomous vehicles as well as quantum computing down the road. Reasons to be bearish, you can see on your screen. Competition, Chinese manufacturers building chips, borrowing IP, reverse engineering. The one thing to say about that, though, is Nvidia is always one step ahead. Most recently this week, you saw reports out of China, but that's for the Hopper chips. Remember, we're on Blackwell, and Rubin's up next. Trailing PE is about 37. Of course, the forward is lower. With that said, the growth projections support it. In other words, Nvidia is growing into that valuation quickly. The stock might not be priced for perfection, but any little hiccup in the stock is going to sell off and go back below $100. The biggest risks right now, regulatory risks and tariffs with China. Of course, Nvidia has competitive advantage with the software component with CUDA. It's really a soup to nuts solution for AI. But Nvidia needs to stay in front of those trends. Right now, it's somewhat of a one-trick pony, and so there are risks to the stock. But I'm still bullish on Nvidia, and I still believe you could see $165 to $175 a share later in 2024. Number 2 is Snowflake. Now, when we talk about AI, there's that phase 1 infrastructure. Of course, Nvidia dominates that. When you think of that second phase, connecting those LLMs are built out by the hardware, by the GPUs, by the data centers. Now, how can we take those LLMs and connect it to enterprise data? Snowflake is a leader in data warehousing, strong platform, strong partnerships. Now, of course, there's competition from Amazon and Google, and especially Databricks. For 2025, $3.36 billion of revenue forecasted, of course, driven by AI and data analytics. Analyst price targets up to $235. Of course, guys, you don't just buy off of analyst price targets. I believe that Snowflake stock could easily see $250 in the next 12 months. And the stock's not necessarily cheap, but if you look at the EV/NTM revenue, it's 11.9x. But just for reference, Palantir, 74.2x. Crowdstrike is at 21.4x. Cloudflare, 20.2x. Axon, 18.3x. And AppLovin, not McLovin, but AppLovin, 17.3x. This is one of 2 stocks that I'm going to cover today that aren't house shares. In other words, these aren't all profits. I have $100,000 invested in this. You can see total cost basis, $103,604. My average cost basis is $148. It's about 5% of the portfolio. I'm currently up about 9%. And if you want to learn more about Snowflake stock, there's this video called Future AI Winners, Nvidia and Snowflake Guide. This got about 77,000 views, and it paints a great picture of why I'm bullish on Snowflake and Nvidia long term. Number 3, if you just watched my top 10 high conviction stocks for the next decade, there's also 13 bonus picks. If you watched that video over the weekend, you know that Amazon is my number 1 pick on that list. It's my 3rd largest holding in the main, and I've been buying it in the community portfolio, and I'm looking to buy more shares. If you're interested in watching this video, it just came out a couple of days ago. Visit patreon.com/firedupwealth. 23 total stock picks are included. These are high conviction stocks. How does Amazon make money? I think this is a powerful infographic. traffic. So if you look at online stores, it's about 40% of revenue. Third-party seller services about 25%. So 65% is really e-commerce. Amazon Web Services, cloud services, about 15.3% of total revenue. Advertising, which has become a new cash cow for Amazon, 9.4% of revenue. Subscription services, so you got that recurring revenue from those Prime memberships, 6.3% of revenue. And then physical stores, you might not know this, but Amazon owns stores like Amazon Go, Amazon Fresh, as well as Whole Foods Market. That's going to be about 3.1% of revenue. I want to also point out that just yesterday, Amazon launched the first Kuiper internet satellites, and this is to compete against Elon Musk's Starlink. So of course, Amazon is a leader in e-commerce. I believe 40% market share. Cloud computing around 30% market share. They're number one. They're the king of cloud. Microsoft Azure number two. Amazon's going to be a huge player for AI. There's also moonshots, like I just mentioned, Project Kuiper for satellite internet, and Zoox for autonomous vehicles. Analyst price targets around $250. Strong potential right now below $200 a share. Of course, we're gonna have earnings here in a couple of days. I think if this sells off on earnings, unless there's a really good reason for it, that's an opportunity to add shares. The number one thing to watch out for is gonna be tariffs, especially China. Keep in mind that up to 70% of goods on Amazon are imported from China, so guidance could be a concern. So Amazon is my third largest holding. It's house shares, up about 181%. Cost basis is below $67 a share. It's about 4.14% of this portfolio. Number 4 is going to be Microsoft. And if you watch that high conviction stock video on Patreon, you know that Amazon and Microsoft are both on that high conviction list. This is a good snapshot to give you an idea of how Microsoft makes money. Microsoft Azure and cloud services, roughly 37.7% on the infographic. It's closer, intelligent cloud is what it's called. It's closer to 36.6% total revenue on that last quarter. Productivity and business processes, about $29.4 billion. That's 42.2% of total revenue. And personal computing is about 21% of revenue. But you're gonna have diversified business segments, Bing for advertising, LinkedIn, gaming, right? Xbox, Activision Blizzard was a recent acquisition. But the three primary segments are that productivity and business processes, intelligent cloud, and personal computing. Microsoft's also going to be a leader in AI. Analyst price targets actually average closer to $490 a share, so you're looking at 20 to 25% upside from right here. Of course, earnings are going to be really important in a couple of days. Does pay a dividend, 0.85%. Now, the current PE ratio, it says 37.5, but the trailing is actually 31.75. Market cap, $2.93 trillion. And I've owned this stock since 2012. The dividends have been reinvesting, so dripping those dividends. It's going to show the cost basis of $52.89, but it'd be a lot lower than that if you rolled the dividends out. So up 644%, it's probably closer to 900%, and it's about 3.89% of this portfolio. Number 5 is Crowdstrike. Strong revenue growth, 31% FY 2025. This is a stock that just every single earnings, they seem to crush it. Now, the most recent earnings report, the guidance actually missed expectations and the stock did drop. You also had the Trump tariff sell-off. So the stock went down pretty hard, but it did recover pretty quickly. And that generally shows you market leadership. When you look at the valuation, it is profitable in the 4P ratio, 123. The EV/NTM revenue, 21.4x. So it is one of the more expensive stocks. It's considered high quality. If growth slows, you're going to have an overvaluation situation where the stock price, of course, is going to come down. And it is a volatile stock, high beta. You have a range here of $200 a share to $455 on the upside. These are house shares. I'm up about 308%. It's 3.52% of the portfolio. So you can see the cost basis is 105.41. I've had some of these shares since the IPO in 2019, and I've added along the way. And near the recent highs here a couple months ago, I was trimming some shares back. Number 6 is Apple, primarily because I've owned it for a long time. These are also house shares. I'll show you the P&L here in a second. This does have a high forward PE ratio, about 28.6. It's expensive. The stock did sell off and came below $200 a share. It's considered a high quality company because of the massive amounts of cash on the balance sheet. I do believe you could see an iPhone super cycle with Apple Intelligence, but you guys know they've kind of whiffed on that and it's been delayed, and that has been a problem for Apple as well. Of course, the tariff situation is a major consideration with China. Apple does do a lot of share buybacks. It does pay a small dividend, so a DGIF stock pays you about 0.47% dividend yield right now. This stock does have some uncertainty, and we'll probably get a better picture here in earnings in a couple days. I've owned this since 2015, so these dividends have been reinvesting. It's showing a P&L cost basis, average $32.78, up 546%. It's 3% of the portfolio, 3.2%, and these are all house shares. Can you guess the seventh one? I've actually been dollar cost averaging up for my cost basis on this one. I believe there's a lot of potential for this company. I just recently did a video. It was called Where Will AMD Stock Be in 2 Years? If you haven't watched that one, go watch it after this one. AMD was ahead of itself. When it got to $200 a share, we were trimming it in Discord. It got up to $220. It was really one where people said, hey, I missed the run on Nvidia. I'm going to go ahead and buy some AMD. It's the second best. And most recently here, you're seeing things like, hey, did you miss the run on gold? Go ahead and buy silver. And that's how bag holders are made. Bag holder 101. I don't buy AMD because it's the second best for GPUs. I buy AMD because it's the best for AI data center CPUs. You can see this last quarter, data center revenue up 69%, free cash flow up 350%. And it is well positioned for massive demand in AI inference. I also really like this ZT Systems acquisition. It's going to give it additional capabilities in AI infrastructure. There has been some recent downgrades. Mizuho, $120. But if you look at the average analyst price target, roughly $147, I mean, you're looking at about 50% upside from here. Tariffs are a major consideration for all semiconductor stocks, especially AMD, which has significant international exposure, including China. So my cost basis was in the 70s. I've been buying at higher prices. My cost basis now is just under $81 a share. It's about 3% of the portfolio. I'm up about 20%. So I am green on it. It's not advanced money destroyer, at least not yet. I want to invite you to check out that top 23 high conviction stock video. Go to patreon.com/firedupwealth. And if videos like this are helpful, and if you're new here, subscribe to the channel, click that bell for notifications, drop a like, drop a comment. Have a great rest of your day. Take care.